Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra with me, Shell Bhatnagar, and this is Market Today, and a show where we'll help you understand the closing action on the D Street. This is the day one of 2025, the new year. Season's greetings to everybody who's joining in live to watch our show. Well, the markets have started the new year on a high note, for sure. 23,800 is something that we've seen on the Nifty today. It's still about 0.6% higher. The Nifty Bank has also considerably improved from yesterday's losses and morning lows as well. 51,194 right now for the Nifty Bank. You have 334 points of an uptick for this one as well. Autos are clearly in the driving seat today. 1.3% higher for the Nifty Auto Index. You have the small caps that are also soaring almost 1% high in trade. Media stocks, consumer durables, banks, financial services, infra, FMCG, ONGC, oil and gas. These are the kind of sectors that are actually buzzing in trade. Realty and metals, those are the only two pockets that are somehow in the red. But we'll see how it really pans out from here. Real estate index, which has otherwise been an outperformer in 2024, is down by 1%. Maruti Suzuki, 3% higher, and that's after 30% improvement in the December sales for the company that we've seen, is now soaring at 11,182. Followed by M&M, L&T, IndusInd Bank as among those top movers on the Nifty. Good afternoon, Shell.
Good afternoon, ladies and gentlemen. It's been a fine start for 2025. There is a lot of activity which points to perhaps a better first week as far as markets are concerned. And all this underlying activity is spread over many parts of the market. You see a fine performance coming in from the NBFC finance space. Muthoot Finance is at a record high, 3.1% higher. The wealth management space is clicking back into gains. Therefore, CDSL is up 2.8%. Angel Broking is up 2.5%. Bombay Stock Exchange has added 1.6%. Manappuram Finance is up 1.1%. These are companies and stocks that are trader favorites, and they are doing a hell of a lot of good as far as markets are concerned. Now, other favorites such as IRFC, 4.5% higher. You have National Aluminium, you have HUDCO, and you have SGVN. These are stocks that have risen on substantial volume and have shown traction throughout the start and for the first 5-7 hours of trade. What else is buzzing? Across the board you see advanced decline, which is fairly good, and you have a strong traction across the board. Look at the fact that 1842 shares are in the green, just 570 are in the red. Sakshi and I track 19 indices for you, 17 are in the green, led by the auto index, where we had seen a massive amount of selling happening in December, and those are the bottoms that are being picked in the market. As also quality numbers released for monthly sales of December have also helped sentiment. Record highs in the market are few and far between, but are doing extremely well. Look at the fact that I had marked Indraprasth Medical in the morning. It's at a record high. Look at Ipca Labs, there was a change of digit. Praj Industries, Muthoot Finance, Coromandel International are some of the stocks that are at fresh peaks. So all in all, after a terrible December, November and October, we've started January on a decent note. We are looking forward to the build up to the budget and of course the third quarter earnings as well. With us is Abhishek Basu Malik. Let's see what his thoughts are on sentiment at Dalal Street. Abhishek, how are you seeing the markets on the first day of 2025?
First of all, very warm greetings. Happy New Year to you and all your viewers. See, I think we don't need to be very exuberant about the first day of trade. Like we should not have been very despondent by the last, say, couple of months where the markets were not going anywhere or going down. I think this is par for the course. We are probably still in a range and will likely to be in a range after last couple of years of good rally in the markets. So I think this is part of that phase. uh, where we are going to digest the gains that we've made over the last couple of years. So I am not neither very exuberant nor despondent about the way the markets are.
Very good afternoon to you, Abhishek, and thank you so much for joining in and for your warm greetings as well. We extend the same to you. May this year turn out to be a fantastic one for you, for your loved ones, and for your entire team at Intelsense as well. Now, of course, that's the market outlook, but there are several gems that you've shared during the course of our interactions in 2024. Just on top of the mind, I remember Genus Power is something that you had caught like really early for all our viewers right there, somewhere probably when the stock must have been around 120, 130 odd levels. What is your own sense of what can be actually seen in 2025? Any key gems that you're betting big on to provide handsome returns in the new year?
So I think some of the older themes continue to look good. For me, I think the government focus on infrastructure is going to continue. This is a government which has come back, and the focus is very clear that infrastructure, especially railways, airports, ports, defense, these are areas where I think one should keep looking at. So, and also power, right? So these are the sectors that I personally like, and then offshoots of these. So companies which are going to benefit from uptake in any one of these sectors, that is something which I'm actually looking at very closely.
Fair. Let's look at some other parts of the market where you see fairly decent gains coming in. We'll focus on the volume buzzers. Sakshi, one thing is that while we might talk about decent gains and the fact that the first day has turned out well, there is hardly any participation. The top traded counter today is Go Digit, 957 crores. You have MobiKwik, which is recently listed, so I didn't mention that. This is the top traded, 1450 crores. ITI, 955 crores. KNS Technologies, 750 crores. SGVN, 707 crores. This is really big compared with what SGVN trades on a regular basis. And the first counter from the Nifty are Adani Enterprises, 669 crores, and ITC, 691 crores. So, you know, the usual names like Reliance, HDFC Bank, ICICI Bank are nowhere to be found in the first 5-7. So one needs to be cautious as far as these changes are concerned. And of course, all parts of defense are doing very well. Bharat Dynamics 1% higher, Garden Reach 3.4% higher, Mazgaon post its split is more active, 2.2% higher, 2277, and of course a strong move coming into Idea Forge, 5% higher, 620 rupees. So across the board there is some active interest in the markets of those erstwhile favorites that we used to talk about on a daily basis. Sakshi.
The auto space clearly is in the fast lane today. Let's get Mr. Basmalik to talk about this space as to what is the outlook going to be like. It's been a mixed bag so far in 2024 for the auto space. There were several challenges that both the two-wheelers and the four-wheelers have actually had to face. Muted demand post-festive season again kept spirits low for the entire sector. But December sales somehow are again fueling some spark back into the sector. M&M has seen about 18% jump in December car sales. Maruti has seen about a 30% jump. Bajaj Auto, on the other hand, has seen muted this time sales around in December. What is your entire outlook on the auto space? Do you think this space will make money for investors in the new year?
I'm slightly a little bit more skeptical on the auto space, especially the bigger auto companies. I think what is happening is December numbers were good. Typically, is usually good for autos because of the year-end discounts, etc., which push sales. But I think there is definitely some challenges in terms of disposable income. So the mid-segment cars, higher end motorbikes, etc., will struggle, in my opinion. Uh, Companies which have products at the higher ranges, so more of so premium offerings will probably tend to do better. Companies which are coming out with newer models, etc., will probably tend to do a little bit better. But overall, I'm not that bullish on autos per se.
What are you bullish on, Abhishek? What looks good for 2025?
Like I said, I think, see, my theory has always been to follow the money. And right now, what is happening is the big spender, right, is the government, whether it is the state governments and the central governments. So that is, that those are the entities which are spending money. So you have to sort of look at sectors which are going to benefit from government spending. What are those, top ones that come to mind? It is railways, it is, roads, it is airports, defense, power. Uh, these are the ones which are the top of the mind. And then if you just sort of look at one level below, so companies which feed into all of this, all of these industries, they will tend to do well. So that is my overall thesis as of now, that if you follow the money in terms of who is spending at the customer level, uh, you will be able to figure out where the I mean, which companies or which industries are going to do well.
Okay. Mr. Basmalik, could you help
So
us
what would be the
understand a
top
little
pick in the
bit?
railway
Yeah,
space?
yeah, exactly.
Sorry, I missed. What is happening with the railway space?
Topics.
No, no. What would be your top pick in the railway space?
So railways, see, if you look at what are the kind of companies that what you have in railways, you have in one end you have the wagon makers, where you have Titagarh, Jupiter. Uh, Incidentally, we have both of those names in our funds. Then you have suppliers who are in that Kavach space, where you have HBL, Karnix kind of players. We have positions in HBL. Uh, you also have companies which are doing construction, so RVNL, IRFC. I mean, the entire the PSU space for construction, financing, etc. So that is the third side of railways. Personally, I think it is the wagon makers and the Kavach uh, players who are going to benefit the most in what is happening right now.
Fair point. Mr. Basmalik, on the defense space also where you're bullish on, could you help us understand, how are you identifying players there? We've actually seen a lot of these stocks come off from their peak about 30-40% odd. Some of them are trying to, slowly and gradually recover at least half of the losses. So at this point in time, are valuations an important metric? Are you looking at the order flows for such companies, the promise that they hold? What exactly is helping you pick and choose within the defense sector, sir?
See, first of all, I think defense again is a play where you are having more and more participation from uh, not only India but exports, right? Now, within that, valuations are very, significantly high for most of these the well-known defense names, right? So whether it is a HAL or those kinds of players, or the shipyards, they are all fairly, in my opinion, fairly valued. Most of them are probably even overvalued. uh, Along with that, if you look at what is changing in the way wars are getting fought, it is getting more and more drone centric, it is getting more and more electronic. So I think we also now need to look at defense players who are just beyond the normal standard defense arms producers or defense producers. So people who are in the drone space, people who are doing uh, anti-drone systems, uh, those players could also be looked at. So you have to be a little bit more picky and choosy in terms of in terms of defense, because also see what is more likely to happen is that as and when let's say we see some kind of a conclusion to Russia Ukraine, uh, some kind of reduction in violence in the Middle East, uh, defense is going to not be front of mind for people, right? And then what typically happens is this becomes a very cyclical play once more. So people who are playing very high valuations, thinking that this is going to be a secular move, might end up getting disappointed.
Okay. Mr. Basu Malik, and
247.
yes. Yes, sir.
Yeah, please continue, Sakshi. Continue.
Mr. Basu Malik, what about the sunrise sectors? Are you bullish on those as well? Like, the solar space, the renewable energy basket, the EV space as well. You did say that power space interests you, but what about the entire renewable energy basket? How are you looking at that for the new year?
See, I think I call them the transformation sectors. So sectors which are undergoing, large transformations or transitions from one technology to the other. So it is, whether you see that in EVs, whether we see that in renewable powers. I think all of these are not 1-2 year stories. These are 5, 10, 20 year stories. And uh, India and the world is on a path which is inevitably towards that. So whether it is, the pace will vary in terms of the adoption of solar, wind, etc., and to my opinion also nuclear power. The pace will vary, but that is the direction we are definitely headed. So there is no reason for not being bullish on renewables or EVs or any one of these transition sectors.
Fair point. Let's just travel back to the markets. We are at 248 now, about 12 plus 30, 42 minutes left for trade. I'd like to mark some buyers only, which is circuits where we've seen strong moves coming in along with fairly decent volumes. So this is Prozone, 20% higher at 33.25. There is a strong move on Padamji paper, now trading at 196, limit up 10%. Merck Electronics, 10% higher, 26.35. A strong move coming into Suzlon today, circuit up 5. 63 Moons has been one of the outperformers over the last 2 months. 940, 949, this is 5% higher. EPAC, Kernex, and of course Wanbury. So these are stocks that are at circuit and are showing fairly decent volumes and good traction on the long side. Are there any circuits on the downside which I might like to mark? These are all names that I'll just stay away from. So let's look at the positivities in the markets. How about all-time highs? Praj Industries, this is a very strong breakout, and the underlying sugar sector is also doing pretty well, at least on the charts. A view, Mr. Basu Malik, on Praj Industries. How do you see it at current levels?
I think it's a extension of the theme that we were just talking about. Praj is into many of the areas of transition of energy, right? So whether it is ethanol, whether it is biofuels, Praj is very dominant and well entrenched player. So I'm actually pretty positive on Praj.
Okay.
All right. Well, apart from this, I also wanted to get a sense on this hospitality space also from you, Mr. Basu Malik. How are you looking at some of the stocks here? I mean, Taj GVK has pulled up in trade today, sharply higher, about 15 odd % odd or so. But all of these other stocks have also been in focus, like IHCL or Lemon Tree, maybe a Chalet Hotels. Some of these stocks have had a good run up in 2024. Do you think this theme can continue to make money for investors, and any key stocks that are top of your radar as well?
I think hotels are, if you just try to book a hotel in any festive period, The kind of price rises we've seen, the kind of occupancy we are seeing, I don't think we've seen this. Uh, I mean, in the last 2 3 years, we've been seeing this. I don't remember seeing this before that. Uh, and the the question that I keep asking myself is how long is this going to continue? Initially, we were all thinking that this is a post-COVID kind of a phenomenon where people are just just going out and enjoying themselves. But this is this trend is sustained significantly beyond the COVID period. So I honestly don't have an answer to your question, whether this is going to continue and for how long, but it is definitely continuing for sure. I mean, as of now, prices, occupancy is through the roof. So I don't see immediately, I mean, in the near term, these companies should do extremely well.
Okay, 252, and we've been following up on two sets of hotels there, which is Indian Hotels, the second largest chain as far as number of rooms are concerned from the Taj Group. Even today, Taj GVK, the separately listed venture, is doing phenomenally well, and all eyes are set on the independent listing of ITC Hotels, the demerged arm of the leisure business from the diversified company of ITC. Traction across the board. DB Realty, this is something that we've tracked often, is now quoting 4.8% higher. It had corrected very, very sharply. We had seen a high of about 194. From then on to about 168, and the last 2 days have seen fairly decent traction. From the NBFC space, there is no let up on 5-star finance. Now 798, the gains are totaling about 3.2%. And coming strong traction is, of course, the newest kid on the block in terms of fresh peaks. It's Blue Star. This is the very, very strong move, a low of 2100 today, 2091, and of course now 2349. A very, very sharp breakout accompanied by a very sharp surge in volume. And of course, Muthoot Finance, this is something that I've been marking repeatedly. So fresh record high. The rally for the last 3 days has moved from a low of 2040 to what it is now, 2230. Sakshi.
Right. Mr. Basu Malik, the segment that I want to understand from you about is the mid and the small caps now, the broader markets. What do you think is in the offing for these two spaces, mid and small caps? There was a lot of fear about excesses, overvaluation in these spaces, in the latter half of 2024. But these are again climbing up fast and seeing records as well on the index level. What is your suggestion to investors here? How should one approach the stocks within this bucket?
See, personally, I've always believed that mid caps, small caps are, they're not separate entities. We should not be segregating companies based on market caps. It's something that, institutions do probably more for a benefit, of selling to customers or whatever. But I don't see company, a promoter or a management getting up in the morning and thinking, my company is a mid cap, so I will behave differently from a large cap or from a small cap. Having said that, I think mid caps, small caps, especially mid caps, in my opinion, is the future. Are the companies which will grow. If you are able to find good companies, good businesses with good business models that are able to grow their top line and bottom line, you will actually end up making much more, returns than just buying blue chips or buying index funds or something like that. So, if you are interested in stock picking, I think mid cap space, small cap space is actually the place to be in. Valuations, etc., is always going to be challenging and that has been challenging for the last couple of years for India, right? To me, valuation is more a function of liquidity, and globally there has been a surge of liquidity, and until and unless that corrects, we will not see a normalization of valuations. But having said that, mid caps and small caps, I don't see any major concerns as such from mid caps and small caps, especially if you have a mid to long term horizon.
Sakshi, let's just spend time with some other indices. We've been marking Nifty and Bank Nifty with quite regularity. I just want to see what the pharma space is doing today. And we've been on pharma's case over the last a week or so. But strong moves coming into Laurus now. 2% higher, 615. Some gossip in the market that third quarter would be something good. And Laurus for the last 9-10 quarters has been a disappointing stock. But somehow Mojo coming back from 475 rupee levels, now 615. A strong move on Gland Pharma. High beta stocks such as Aurobindo Pharma, Granules, Natco, Lupin and Glenmark remain in an uptrend. And of course, in terms of all-time highs, we've been tracking Ipca, Lupin to some extent. So this is a space that has given fairly decent returns. Let's speak to Abhishek and find out if he has a view on pharma and any favorites that he has. Abhishek, your view on the drug sector?
Last year and a half, I've been very bullish on pharma. I think pharma is one sector which is more or less, non-cyclical, where you can find good scalable companies doing very well. The challenge with pharma is that you need to be very stock specific because you can't really treat it as a sector, right? So that is something that you need to be careful about. Amongst the stocks that you named, I think I really like. I think Lupin is very interesting. A lot of these companies are doing very interesting things, whether domestically or through exports. Worth looking at.
Okay, then. Well, we will thank you, Mr. Basu Malik, then, for being with us on this first day of 2025. And yet again, wishing you from the entire team of Business Today Television a fantastic year ahead. Maybe see you more often, guiding our viewers with your insights on the markets and how to go forward from here. Thank you so much.
Thank you. Thanks.
All right, viewers, time to now introduce to you another guest on the show. We have Mr. Sharad Avasti, Head of Research at Smiths, now joining in. Warm welcome to you, Sharad ji, and good to have you with us on day one of the new year. Here's wishing you a very happy one, a blessed one, and a prosperous one as well for you, for your loved ones, and your team members at large as well. And may this be the most profitable year yet for all of you.
Thank you for having me on the show. Happy New Year to you, your team, and all your viewers. Yeah, I'm also hoping that this year turns out to be better than last year. Last year was an average year, but the kind of events that we are already looking at, most probably maybe this year would turn out to be a much better year vis-a-vis 24.
So you do say it's been an average year. Tell me, what are the things that you will continue carrying on from 2024 into 2025, and what is it that you will do differently in this new year from the last year?
I think in terms of my investment approach, it would remain static. It doesn't change much. But yeah, I think I would again be wary of, stocks trading at abysmal valuations. And maybe I would not hurry to catch falling stocks too soon, like I've done in maybe the microfinance space or even in the agrochem space, where the recovery has probably taken a bit longer than I had foreseen. But I still think I continue to be bullish on the agrochem as well as the microfinance space. Maybe it's got delayed by 2 to 3 quarters, but I think the valuation comfort is still there in some pockets. And I would continue to be with those companies and be invested there. I think over the next 2-3 quarters, we will see a reversal of fortunes in those spaces.
Okay. All right. Sharat ji, do tell us any category that you believe is something that investors should look at in terms of large, mid, and small cap stocks. Where do you see outperformance in 2025?
Uh, I think mid caps and small caps haven't really corrected that much relevant to the large cap stocks. So I think large caps offer you a better opportunity in terms of price corrections that we have seen. Mid cap, small cap, by virtue of being a much larger basket, obviously, sizing up good ideas within that space is much easier vis-a-vis the large cap basket by virtue of it being smaller in size. But if you consider as a basket, I think most probably you should be better off staying with the large caps. With mid caps and small caps, more so in the small cap space, you have to be very stock specific, and your understanding about that story should be very strong. Maybe this is not a year to go for generic ideas where you hear say ideas and think that will go up along with the markets. I think now on the market could be very specific with respect to at what valuation what you are buying, and it might not be a very generic all round rally in the small cap mid cap space. Even within the large caps, I think stock picking would continue to be the focus. But if as a space I have to earmark, I think being with large caps probably would be better if you are happy with a lower alpha, that is.
Okay. And in terms of key themes that you're betting big on, what would those be?
Um, I think again it has to be specific, but in terms of valuation comfort, whatever we have looked at recently, I think within the large caps, maybe some oil exploration companies do offer you a
Okay.
comfort zone. I think both ONGC and oil are trading at decent valuations, though the outlook regarding oil isn't very healthy or bullish. But even with a steady price in the oil market, I think both these companies should do well in terms of numbers, and in terms of valuation and dividend yields, I think both score. So that could be one space you could look at. You could look at even the OMCs. I feel though a bit of contra bet both opposite ends, but even the OMCs at these valuations seem to offer a good scope for future growth. In terms of valuation, I think the paper stocks certainly look like something that are very attractively priced at these levels. I think most of the stocks are trading at what 6-7 times. So that could be one space you could look at. And some of the automobile, I think something like a Tata Motor, Hero Motocorp, Maruti could be good bets to carry on to the next year. And obviously, Reliance after this correction does look good. So partly you could look at the oil and gas space to the larger companies, OMCs, oil exploration, as well as Reliance. And in the auto sector also, I think the large three ones do seem to offer some good upside from current levels, being Maruti, Hero Motocorp. I think these are good ideas, even Tata Motors after this correction. I think these could be good ideas that could yield you very good results. Paper certainly looks like one story that could be very interesting. JK paper, West Coast paper, Tamil Nadu newsprint. These could be ideas that could do very well in the next year.
Okay, got that. So that's the list of key themes and key kind of stocks that you could be looking at. I also wanted to get a sense on understanding how would you approach this new age tech space. Some of them were very interesting to look at. We've had several discussions on Zomato, on the on Swiggy's valuations, and now how it's catching up as well. There are several others. There's Ola Electric that we've discussed too. Paytm has had a great year in terms of reversal from the lows as well. 3 times it's gone up. PB FinTech is looking very interesting. How are you really looking at this entire new age tech basket? What looks good to you for the new year?
Yeah, I think when I look across, I think I would wait for corrections to happen. Like Ola, we got a decent opportunity. Paytm, we got a decent opportunity to get into. So looking at the whole space, I think offhand, what I can remember is probably Honasa is a good idea where you're getting it at
Okay.
decent valuations. And once the tide turns with their, inventory realignment complete here and offline stores gathering pace, I think that is something that could be a very interesting idea to watch. And valuations right now are very comforting. For that matter, even Swiggy probably might have more leg to catch up with the valuation at which Zomato is trading. And I think e-commerce or quick commerce particularly has become the buzzword right now. The only thing that could, create a bit of butterflies under your stomach for this segment is that everyone seems to be entering. Even the recent IPO, most probably they were also talking about entering hyper local and all that stuff. Reliance is talking about it. Spencer is talking about it. So maybe that space gets overcrowded. But these startups, these things will happen. They will come in with a new venture. They'll scale it up, and most of the competition will try to come into and play party poopers. But I think that's okay. But on balance, I think that's a theory that should play out, say, over the next 1.5 2 years, where competition starts to hinder them, and you can't really expect such businesses to have linear growth over the next 4 5 years. They will have a new segment, maybe like when Zomato listed, Blinkit was nowhere. Now Blinkit is the main driver. So I think these things will change, and but I think if I have to take a call, I think Swiggy still probably looks better than Zomato on valuations. Though the differential is now that not that much because Zomato corrected a bit and Swiggy's gone up. But I still think Swiggy could do a bit of catch up depending on the valuations it is trading at. And the other stock I think would be Honasa, Paytm, etc. Have run up. Maybe you have 10-15% more upside because I'm expecting a risk on in the markets. I have been expecting it for the last 1.5 2 months, but not much has materialized in the Indian markets. But from here on, as I'm expecting the risk on to play out in emerging markets or developing markets particularly. So that should help most of the new age companies. But I think in terms of valuation comfort, Honasa is there. And if I have to bet on one name, I think I would still continue to go with Swiggy. If you can extend your horizon, I think maybe even Ola Electric would make good sense at these valuations.
Okay, understood that. Now tell us, Mr. Vasti, is there also any sector that you would probably just stay away from in the new year? Where could it be risky to take a bet for investors, and therefore a lot of caution is advised?
I think some of the metal names, but they've also corrected. I think they are at median valuations right now. The China overhang is very substantial. I think spirits could be one, breweries basically. That could be one area where valuations are a bit frothy right now. Though I think the premiumization play is very strong in India, particularly, that should play out very strongly. But I think the tariff situation, which we have been talking about, US, I think liquor could be the first one to be hit by it. As had been hinted by the president earlier. So that could be one place which could get some rough weather to face going ahead, of headwind in terms of tariffs being lower for international brands. That could affect local companies. But beyond that, I think generically, if I have to look at, I'm not seeing anything after this defense and railways correction. It's not that something is very frothy in terms of valuation. Maybe the ER&D companies, the likes of Coforge, Persistent, they might have some froth in valuations, might find it difficult to go up from here. And IT as a whole might find it difficult, might be an overcrowded trade, though we have seen some corrections in the recent past. So maybe IT, maybe some bit of, these companies that I'm speaking about. But generally, maybe IT and pharma could be something I think that may have moved up too far out of the comfort level and might find it difficult to make money in the next year. Real estate could be one theme if we do not have additional follow-up in terms of numbers every quarter. I think that could be one theme where, barring a handful of smaller or mid-sized companies, most companies are trading at 48, 49 times forward. FMCG, I think, still trades expensive. So these are some pockets, and the larger engineering companies, I think they certainly are trading at frothy valuations, the likes of Siemens, ABB, Cummins. I think these are some stocks that could be trading at frothy valuations.
Okay, got that. Sharadji, one more question that I had was in terms of what we are going to be seeing as a macro, globally changes like Donald Trump assuming office in January, and then of course the US Fed's decision going forward. We have the budget and the earnings coming in as well. How do you think we are going to be looking at the next 1.5 months of all of this news flow build up? And do you think that will have an impact in which investors should be probably looking at the way they approach the next 1.5 months of investments?
Yeah, I certainly think that these are big events. Firstly, let's cover Trump. I think the market right now, the way it is behaving in terms of government security yields and everything, while we are accepting one fact, which is the tariffs, which are unnerving developing markets and markets like India, China, etc., though the impact is expected to be much lower for India. But still, there is a bit of nerves about it that how this is going to play out. But the other aspects that he has been very vocal about is lower interest rates and lower taxation. I think the US markets have not really corrected. They are still in the jubilant mood, minor corrections here and there, but they have largely been up. So I think Trump, the market is only betting on possible tariffs and not lower rates. I think lower rates is one thing that would play very favorably for India, particularly, or most developing markets. So I think we are not taking that into account. So Trump coming into presidency, I think you are looking at, lower tax rates and lower interest rates. That should be good for most developing economies and emerging economies. So India should benefit out of that. The second thing is the budget. I think the type of murmurs we are hearing about the budget, most probably this time around, there could be some populist measures, not in terms of the traditional populist ways, but in terms of rationalization of major deadlocks, which could be GST on maybe, petrol, diesel, some tax rate increases. That is, our taxable this bracket goes up. I think these could be viewed as very positive developments, and the market could be very happy. STT abolishment, I think that is one big expectation that people are posting in. I think if the market, if the FM does oblige on any of these, I think that could be a very big kicker for the markets. And after this recent last 2-3 months where we have really gone down and US and most markets have largely gone up, I think there is a high probability that now we don't have much of a differential in the valuation discomfort that we had earlier around 3 to 4 months back. So I think from here on, the next 2 to 3 months, 6 months, the number should also be very good. The interest rate trajectory would settle on the lower side, and I think if any of these budget announcements do go through, I can't see anything that could be very negative for the markets. Largely, most of it should be very positive. The only thing that could be very negative is that Trump comes in with very major tariff regimes, which could be very high. So that could result in some problem. But I think largely inflation, interest rates, and even the budget announcements and the tax cuts and interest rate cuts in US, that should aid very strong winds in the local market.
Right. Good afternoon to you, Sharadji, and a very warm welcome. Happy New Year, Merry Christmas, and we start at least January 1st on a decent footing. Your expectations from the budget in terms of tinkering is what you've said, but within the PSU basket, any specific space looks good to you after this very decent correction that we've seen, and of course during the run-up to the budget? Where are you betting your horses on?
Good afternoon, sir. Merry Christmas and Happy New Year to you as well. Nothing, sir, across the board on the PSU side, but as I said, maybe the OMCs could be one basket you could look at in terms of lower oil prices, good numbers. Valuation comfort is now there, whether you talk of IOC, HPCL, ONGC oil. ONGC oil are actually on the ENP side. I think they're also the type of numbers they can post continuously even with lower oil prices. I think the valuation and the dividend yields are decent in both cases. And with GST rationalization for petrol and diesel, these companies could benefit a bit. So I think that is one space that you could look at within the PSUs. But as such, I think generic ideas, they would continue to do the same. T&D is something that would continue to grow leaps and bounds. I don't think any additional big measures are going to come in. Railway capex is going to continue. Infra capex is going to continue. So I think these are spaces that will continue gaining traction. But I think for particularly the rail and defense, I think exports will be the big opportunity. How they materialize over the next 1.5 year, that could result in a lot of improvement. So maybe something like an RVNL could benefit out of international orders. Most of the defense companies could benefit substantially out of some, defense improvement here and there. So largely not across the board on PSUs, but if across the board I have to pick one segment, I think that could be oil and gas, particularly OMCs and exploration companies, where I think there is a bit of valuation comfort and a bit of news flow from the budget side. So I think that could be one space that could be looked at.
Sharadji, when you put in your lens on the valuation side, within the large cap space, which has underperformed both the small cap and the mid cap indices by a wide margin, what are the one or two stocks that come to your mind immediately, which you've also discussed with your institutional clients?
So institutional clients is the institutional desk parlance. I would not look into. I'm largely with the private client group. So I think what we are looking at right now is, maybe an IndusInd Bank, Reliance, to some extent maybe an ITC. These all look like decent large cap ideas that you could bet on. And within the engineering space, I think Larsen probably is a very good bet that you can hold on to. Uh, as I've spoken earlier, maybe a Tata Motor, Hero MotoCorp, and Maruti from the automobile space also make a very good, decent basket. I think after this correction, they offer decent upside from current levels. So offhand, I think these 6, 7 names, even UPL, PVR, Inox, my usual devils, have been advocating them for quite some time. Though not much has transpired, though PVR has improved at the EBITDA level, but at the PAT level, still the improvement has to show up. So I'm very hopeful that, with the kind of releases we are looking at and the kind of OTT fatigue that we are already looking at, finally, movies will make a comeback. So I am very hopeful that theaters will make a comeback. This was a short-term fad with respect to the OTT craze. But I think gradually it's dying down and movie going should resume as a behavioral attire. So I think that should be very positive for country companies like PVR, Inox. UPL should gain out of the agrichem rebalancing of inventories finally happening maybe. So I think valuation comfort is there. IndusInd after this correction and with the MSME party, particularly or the microfinance book, not having that much of NPAs as the market was afraid of earlier. So I think that could be one stock that could give you very decent bets. Reliance for targets of around 1600, 1700. I think that's a very underrated story at current prices. So I think these are some of the front lines. Even Tata Motors at these prices, I think you could easily look at targets of around 1,000 on the stock. Though recent trends from China, etc., have not been very encouraging. But I think it's a short-term thing, and gradually normalcy should come back. And the JLR turnaround is more or less complete, so they should gain out of it.
Okay. Sharatji, again on the macro level, I just wanted to understand, this has been a year where we have seen outflows to the tune of 1.2 lakh crores from the FIIs. Despite that, we've managed to end the year at about 8.5, 9 odd % up. What's the sense that you're getting for the new year as far as the FIIs are concerned? Do you think they will have key triggers to get attracted to India again, or do you think again they will have many choices to be spoiled for?
No, as I was telling you earlier, Sakshi, that if there is a risk on mood and if there is an interest cut mood across the world, I think more money would flow into emerging markets. The dollar strength is something that has been very unmatchable. And I think with the bond flows, etc., coming in favor of India, I was expecting the rupee to appreciate. The only silver lining, though, is that vis-a-vis most currencies, it has depreciated less, but appreciation has been a far-off dream for the Indian rupee. So I think broadly, the first thing you could consider is that there has been a very big outflow this year, probably one of the biggest outflow years. So to have a follow-up year with that kind of outflows should be a rare event. I don't expect that to happen. And considering the factors, I think once a risk-on is there or a lower interest regime is there, you should have better inflows for emerging markets. So the developing markets also. So I think that way India should also benefit. So these two things I should culminate into FII flows returning to India, or at least not being as negative as they've been now. And regarding the domestic flows, I think you can be pretty sure our per capita incomes are set to double. And I think the equity cult is still pretty nascent, and there is a lot of legs for it to go from here on.
In the undervalued and underowned space come sugar, paper and tire stocks, Sharatji. In this space, would you have a favorite, given the fact that both sugar and paper are politically active as well, and we are headed into the budget?
So sugar, I think largely is fairly to fully valued. To find something undervalued there is very difficult. It's been in the pick of action for quite some time. But paper, yeah, you certainly pointed rightly. I think that is one of the most cheaply valued space. So all three paper companies, I think, are excellent bets, whether it's West Coast Paper, JK Paper, or even Tamil Nadu Newsprint. I think these are companies which are trading at very attractive valuations on an average, maybe 6-7 times PE multiples, which is the cheapest probably in the whole market right now. And prospect should be good for them, and I think they could be one space. Tires, yeah, not across the board everything is attractive, but I think most of the companies are trading at a discount to their historical valuations. And with oil prices probably staying lower, you would not have much of a raw material pressure there, and the demand on the replacement and OEM mix should be strong only. So I think that should lead to better numbers for most tire companies. In terms of valuation comfort, I think within tires, JK Tire is the best bet probably to look at.
Okay. Um, Sharadji, one more space that I wanted your attention is on the earnings, like I pointed out. What are your expectations from the upcoming earnings there? We've had a disappointing Q2. Do you think that disappointment will continue in Q3 as well? Are there some pockets which have already started to show some improvement, at least green shoots emerging in terms of earnings? Where would you be overweight, underweight in terms of earnings?
See, I think particularly to time earnings sector-wise is a difficult job for me, but I think Q3, Q4 generally I'm expecting the numbers to be much better. Q1, Q2 had a lot of variables which are not in favor of most companies. And though Q2 was a rude surprise to me also, I did not expect so much of a slowdown. But Q3, Q4 onwards, if you look at, I think most of the anomalies have adjusted. Most of the festive season have bundled into Q3. So that should help. And the slowdown in Q2, I think that should result in improved numbers even in Q4, basically just shifting of the demand and industrial segment. So I think Q3, Q4 should be very good. Generally, Q4 isn't that optimistic, but I think this time around there would be a lot of catch up happening there because of the slowdown we saw in Q2. So maybe Q3, Q4 both would be very good across the board. Regarding particular outperformance, I think maybe two-wheelers could be one segment that could outperform. The inventory levels have substantially come down at the dealership level. Uh, so I think that could be one space that you could look at. And across the board, I think even banks could surprise you on the upside. I think the deposit advance differential has been coming down. Recent data suggests most probably the NPAs are not jacking up like they were earlier, particularly on the microfinance and MSME segment. So I think once that NPA juggernaut slows down, not juggernaut basically, but it was a bit higher than my comfort level. So this quarter onwards, I think most probably you will see lower NPA, GNPA levels. So most finance companies should do very well. Even the bank should do very well. The advanced deposit lacuna should also be behind us. And generally, I think across the board, maybe next quarter onwards, even the IT companies could report some bit better. Some bit of improvement could be visible on the textile front. But I think more than this quarter, I think next quarter onwards, you will have much better clarity regarding, the logistical issues also, how they are panning out for particularly the pharma companies. Because last quarter also most probably most of them would have faced the Red Sea issue. So this quarter onwards, I think we will have more clarity Q4 onwards. But if I have to bet on one segment, I think maybe the two-wheelers could do well. Maybe the banking sector could do well.
Okay, got that. One more pocket that warrants our attention is the primary market action. Of course, 2024 was a record year in terms of flows that came in and funds that were raised via IPO space. Some of the largest IPOs in the history of the country also got listed. Your own sense, what is your outlook on the IPO market in 2025? Do you think this is one pocket that investors can continue to focus on? Although we have seen enough and more disappointment on the lack of allocation when it comes to the IPO allotments coming in. So, that definitely disappoints the retail investors, but there is no lack of exuberance in this space, and there's everybody who wants to make money on day one of the listing day. So, how does one approach this? Are there also any key names that you're actually looking forward to? We have a lot of them. I mean, like, an OYO could be coming in, a Tata Capital has been announced as well. We could be looking at an LG again. So, there are some interesting names that are already popping up. So, are you also looking at some?
Yeah, I think it should be as attractive as it has been this year. Next year also, the pipeline is pretty strong. I think Ather is one that I would be looking at. That's an interesting space. Even some of the other names that you said, I think they are interesting names. It depends what valuation they come up with. But I think most of them would have learned it the hard way that it's better to keep something on the table for the investors who are bidding in the IPO to get a proper response. So I think, yeah, these could be good names that you could look at. Ather is one name I'm looking at that could do very well. Rest, I think the pipeline is very strong, and next year also most probably will break most records with record to IPO funding.
Okay. And, lastly, sir, I just wanted to understand from you in terms of the returns that you can expect on the benchmark index, the Nifty. What would it be after, this is the ninth consecutive year of gains for the markets. And of course, in the last 4 or 5 years, we've actually seen a bull run in its top form. Do you think this can continue? What kind of returns should be realistic to expect from the markets this time in 2025?
Uh, I'm expecting it to get peak numbers in the next year as more and more data centric things point that India probably is on a much solid footing vis-a-vis what we have seen in the past. And I think, as you rightly pointed out, there have been so many IPOs that should that largely have raised money either for working capital or capex requirements or debt repayments, and most of the IPOs seem to suggest that they will have very strong growth. So I think across the board we will have that culmination, the type of defense spending, the type of capex across railways, infra. I think that is all starting to yield. Even real estate is very bullish across the board. So I think that all this should play out very well for most companies, and that should translate into very good macro numbers as well. So next year, what we are expecting is anything between 20 to 25%. This has been a somber year, maybe not at the highs, but from a year to year point, year to date point, I think what are we 8 to 10% higher. So I think next year probably you could be looking at a much better year with 20
Okay.
25% returns for fund
Wow. Okay, that's perhaps one of the most bullish expectation that we've got. So thank you so much for lifting our spirits, Sharadji, with that outlook on the markets. And it's always a pleasure. It's been so far in 2024 to be interacting with you on various accounts. And we hope that in 2025 you come more often to give us all that wonderful insight that you always share with our viewers. Here's wishing you again a fantastic 2025. Thank you so much for being with us on this edition on day one.
Thank you.
All right, viewers, 3:28. It's time to start wrapping up the trade for today. Day one has actually been pretty good, and this is what we expected. While the world is shut, everybody was probably looking at India because Indian markets have been open on first. So this actually gives everybody across the globe also some sigh of relief and some expectation that probably the year is off to a great start and we could expect good returns coming in. And Sharadji is in fact saying that this could be a much better year than what has gone by. 20 to 25% kind of returns is what you can expect. One of the most bullish comments right there that we have. So some analysts are really looking at big returns coming in. So don't leave it at that. Remember, investment is an ongoing journey. So in case you've had, some losses towards the end of the year 2024, don't just leave the race just yet. You have to continue to be in the game. 0.4% of an uptick for the Nifty right now, 23,759. We've been hovering higher from about second half of the trade has actually been much better in the morning than the morning one. 113 points higher. That's how we have shut shop in trade today. Among sectors, it was the autos that were the top moving sector today, 1.3% up. Small caps were up 1%. Consumer durables up 0.6%, financial services, private banks, infra, mid-cap stocks, and even the FMCG and oil and gas, even pharma stocks, they've been actually hovering higher in trade. Only metals and realty were the only two pockets that dragged in trade today. But top movers, Maruti, M&M, L&T, Bajaj Finance, and you also had Tata Motors, Eicher Motors pulling up in trade as well. Along with this, when we look at the top losers, you had Hindalco, Dr. Reddy's, Adani Ports, Oil and Natural Gas, and Tata Steel as among those stocks that dragged today. On the F&O pack, you had SJVN up by almost 6% odd. Indian Railway Finance Corporation or IRFC also up in trade in the F&O pack. Oil India, Muthoot Finance, these were the stocks that were doing well. On the lower end, however, you looked at Crompton Greaves Consumer, Canfin Homes, 197 Communication, Indian Bank. These were the stocks that in fact dragged in trade. Well, with that, we wrap up day one of 2025. Here's hoping that you also continue to be with us on Business Today Television on all the days of the year to stay on top of your investment journey. Thank you so much for being with us on this show. Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is yet another year-end special interaction that we're going to be having with a top market master for all of our viewers on this New Year and year-end specials. Remember, the Indian equity markets so far in 2024 have had shown a lot of resilience for a major part.